It's about that time of day again. My name is Joseph. Tuesday evening, February the 20th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is bearish and trying to retest today's low, but we're only a few ticks away from the target. So the plan is traps to avoid selling too close to support levels tomorrow morning. The S&P is also bearish but trading with a range. That tells me to focus on selling the high of that range using the 2-try rule tomorrow morning. Nasdaq also range bound, this time with a triangle pattern. That tells me to avoid the middle and focus on failures to sell the highs and buy the lows tomorrow morning. Speaking of tomorrow morning, gold is bearish with a beautiful example of a grind break of a channel pattern coming off Friday's high. That tells me there are traps to be filled up above those prior levels of resistance, and we're looking for those to be the most reliable trades in the yellow metal tomorrow morning. Speaking of tomorrow morning, euro is bearish with a spike and channel pattern, but what I don't see on the chart for the euro tells me where the most important opportunities are going to be for Wednesday's session. Now, going into Wednesday, tonight is all about anticipating traps for tomorrow. Not only so we can avoid those traps, right? Don't take back the money we've made so far this week, but most importantly to capitalize on those traps going into Wednesday's trading session. As always, I've got a great newsletter in store for you guys and gals tonight. We have a ton of big moving markets and big opportunities for Wednesday's session. Before I jump in though and put the plan together for Wednesday's strategy, I want to remind you, if you're on YouTube right now, make sure you subscribe to our YouTube channel. Click the bell icon. That way you always get notified with any new video. And don't forget, if you have any questions about any of the topics covered in tonight's video, post them in the comments section below the YouTube video. If you're here on the blog at sidewaysmarkets.com, please don't forget to join our mailing list. In the upper left-hand corner, give me your name and your email address, and I'll send you an email every evening when our nightly newsletter goes live. Lower left-hand corner, just below that, you'll find a place to join our many different social media channels, right? If you're on social media, look for exclusive content. I'm always posting important links, charts, and updates throughout the week on my stock Twitch, Twitter, Facebook, and LinkedIn channels. Speaking of charts, how easy is this? You guys always tell me one of the favorite parts about this newsletter is that you can not only watch the video tonight, but all the charts from tonight's video are available for you to download. Just follow that link right below the video here on the blog at Sideways Markets. Only place to find that link is here at sidewaysmarkets.com, and you can download all the charts for tomorrow. And then speaking of tomorrow, what are you waiting for? Grab that free pass. You're going to learn more with me on that free pass than you will anywhere else on the interwebs. I can guarantee you that. Grab that free pass. Come out and join me in the trade room as a guest this week and see what all the commotion's about. Don't forget, any questions, drop them in the comments section below. Our trade room opens up every morning at 8 o'clock Eastern time. And, of course, we are off to the races, getting ready for Wednesday's session. Let's jump right in. Tomorrow's Wednesday, February the 21st. What do we have on the schedule here for tomorrow? We got quite a bit going on here tomorrow in the Wednesday session. Now, don't forget, of course, Monday was a holiday in the U.S., so a lot of news got shaken up a little bit here this week. Most of the news that was on Wednesday has been pushed back to Thursday. So, for example, you'll notice there's no inventory report here today or tomorrow at 10:30 a.m. Eastern Time. That'll be on Thursday at 11 o'clock Eastern. So don't be surprised if you get some news that usually comes out on Wednesdays that's been pushed back to Thursday because Monday, again, was a holiday. Now, as you can see here, there's no major news in the overnight session, so nothing to worry about there. And, of course, looking at tomorrow's Wednesday session, we got a peppering here of news in the overnight London session. We got 3 o'clock, 3:30, 4 o'clock, and 4:30. We're going to hear from France, Germany, the ECB, Great Britain, right? Got a lot going on tomorrow morning. If you're trading the overnight London session, be aware, right? Get some big news here, kind of a peppering of news, right? A bunch of these flash reports tomorrow between 3 o'clock and 4:30, so keep your eyes open. Now, the big news tomorrow, though, we can assume is coming later in the session with that composite flash, existing home sales, and the FOMC meeting minutes. Obviously, in the U.S. morning session, where we'll be trading tomorrow morning, we got that 9:45 composite flash, and we got that big existing home sales number at 10 a.m. Eastern Time. If I had had to guess, I would guess that 10 o'clock existing home sales number is going to be a big, big market mover tomorrow, so keep an eye on that. And that's a good thing because we got the FOMC meeting minutes at 2 o'clock Eastern time tomorrow, and that oftentimes, and this is pretty much a rule of thumb across the board, anytime you have news at around 2 o'clock, between 1:30 and 3 o'clock in the afternoon, typically that means that lunchtime will be a little bit earlier. Traders will come back to their desks a little bit earlier so they can be ready for that FOMC meeting minutes announcement. So that's good that we have that 10 o'clock news because hopefully that will send us right into that 11 o'clock hour pretty easily. We expect volume to drop off over lunch, and then, of course, looking for that FOMC announcement, right, to rattle those cages, right, tomorrow afternoon. So be aware of that. Got a full day of news, right, starting off in London, moving through U.S., and, of course, right, finishing up all the way through home sales and FOMC, right, minutes here tomorrow. Final full week of the month of February. It's been a great month so far. Don't forget, we open up our trade room every morning, 8 o'clock Eastern time. I look forward to seeing you there with me. Let's jump into some charts now. Now that we know the plan or the schedule for tomorrow, right, let's jump into oil. Then we'll go S&P. We'll do some Nasdaq, gold, and we'll wrap up on the euro. Crude is bearish, right? Crude is pretty obviously bearish here. It's a spike and channel pattern, and we're trading now, right, trying to retest that low at 61.43. The bears have control, but this is a good example of a situation where we are just inches away from that seller's target, with additional support levels waiting just below. This tells me that we are way too low to start selling now because this is where most sellers will likely be taking profit. Knowing that, my plan is to avoid chasing this move lower, looking for trap patterns up above those prior swings as sellers try to get back to that 60 level right later on this week. So as you can see, a couple components here right now. Strong move down, that leads into a spike in channel. And isn't this an amazing example here? Take the first pullback, the base of that spike in channel, and look where we go back to, where we call this, right, the correction zone. Right, that's the correction zone off a spike in channel. If you've been in our intermediate classes here at School of Trade, we talk about spike in channels. It's always amazing at how well spike in channels work and perform. If you haven't learned spike in channels yet, you can definitely go to the website schooloftrade.com, register as an intermediate class member, or go to the YouTube channel, search for, right, spike and channel, and you'll find tutorials, right, on those spike and channel patterns, right? So spike and channel pattern holds up inside the correction zone, and now the goal is to get back down to retest this low, right? Up and then back down to retest this low. So knowing where the objective is, right, the objective is to get back down to that 61.43. Look where we are. Right, we're only about 15 ticks away right now. So this is not a very easy place. It's not a very enticing place to be a seller because in all reality, the only thing we really have to look forward to is that move down to that 43. Okay, I'd much rather sell high when I have all this wide open space, right, rather than selling low, right, all I have is this little tiny open space down here. So we know right away it's not really the best place to be selling because we're kind of sitting right on that objective right now. Now, another thing here, if we keep going lower, we have a measured move. Take that high, drop down to that low, back to that high, right? There's a measured move sitting right below us, right? We're only 20 ticks away below 43, right, down to that measured move. So we got a problem here. We're definitely bearish, but we got support at 43 and we got more support down here at 61.21. I can safely assume these sellers are trying to get back down to some of these big swings, right, that we saw from last week. If I zoom out a little bit here and give you more of a bird's eye view on this, you can really see, right, this is obviously big round number down here at 60. So that's a real easy kind of target magnet here for later on this week. But right now, though, I would think first objective, get to 43. Second objective, 60.76, right? That prior swing there. And then final objective, right? 60, 59, 59, that area here, right? As we give back a lot of the gains, right, from last week. So those are obviously some big targets waiting for later on this week. But right now, though, right, we're too low to be a seller right here. So what's the plan going to be here for tomorrow? I always like to break this down into up, down, and sideways. That way I have every scenario planned for, and I can be ready for either one of those scenarios here for tomorrow. Well, first of all, let's talk about price goes higher here. I've got a trend line drawn in. You can notice how we draw that trend line off these lows, right off this high. I would love to be able to use this trend line as resistance tomorrow. I may not get it, but I'd love to use that trend line along with a failure, right? And then back down we go. So kind of imagine how the ball bounces here, right? Price goes up above the moving average. It traps high above that 88. We use that resistance trend line, right, to kind of protect ourselves against buyers because buyers aren't going to want to buy into it. We pull back to the moving average. Now, buyers will be looking to buy that pullback most likely. You know, every time we pull back to that moving average, right, in a bear market, we're looking for the bounce, but then more importantly, looking for the failure back down. Failure usually leads to strength. That strength leads to pullback, and that will set things up here, right, for a sell back down. So 3 areas of interest, 1 being off that trend line, 2 being below the moving average, below that buyer swing, right, and then 3 being off of that moving average for that little strength, pull back, and drop back down to that low. That's if price goes higher. I'm going to talk about a reversal in a moment, so I haven't forgot about the bull side yet. For bears, though, right now, if we go sideways, okay, this may happen. We may not see a lot of sellers that want to sell low, but we may not see anyone taking profit yet. So price may start going sideways in the short term, right? Look for a possible sideways range. If that's the case, it'll have a bear bias to it. With that bear bias, I want to sell the 2-try rule. 1 try, 2 try, and then once I see that second attempt, right, that's when I know we can sell it back down, right, into that range. It's called the 2-try rule. We've talked about this many times on our nightly newsletter. And again, we cover this in our video classes here at School of Trade. So that's the plan if we go sideways here in the short term. What if price goes lower, right? What if we keep grinding lower here? Then what? Well, not much changes. We're still sitting at a level of support. So anytime I find myself in a bear market where the only option is to sell into support, right? That's what I call selling low. I want to look left, find some prior swings, get up, and sell back down from there, right? Again, we call these traps, right? They're called traps because counter trend traders on faster time frames, they often mistake those little traps, right, for reversals, right? It's not a reversal until we get what? Strength, pullback, strength. So speaking of reversal, right, here's a good example right here. Late in the day today, or not that late, right, but late morning today, strong move up. We pull back to the moving average. Look what happens, right? The buyers try to buy it, and it collapses back down. So the buyers, in order for the buyers to take control, they have to see a strong move up, hold a pullback, and jump, right? Once we start seeing that pop, 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 once we start seeing those sellers run for it, right? Once the sellers start bailing, sellers become buyers to get out of their short positions, and price will rally higher. If the market can give me that strength, right? Strength, pullback, strength, then what I can do is I can draw a trend line off of that high, I can bring it up off of that low, right? And then of course I can look for that pullback, right? That pullback from there. It'll usually be somewhere between the high of that first pullback and that hidden channel right there, right? So look for that area to be a buyer and be aware of where you are because the objective is going to be right up at that 62.65. So if we end up going strength, pullback, strength, and we're way up top around those highs now we got to make sure we really stay patient, right, to buy as low as possible off of support so we're not buying into that level of resistance. So again, we like to see the market go up so we can sell it back down. If it goes sideways, stay patient for the 2-try rule, right? If it goes lower here, don't take the bait, right? Don't fall for that trap. Wait for that little up and then back down. That way we're not selling too low. And don't forget, if we do make a run lower here tomorrow, we get some major targets at 60.76, right, and 60 even waiting later on this week. Also, don't forget there is no inventory number here for tomorrow. That will be pushed back to Thursday at 11 o'clock Eastern time. Let's keep rolling here from the crude oil futures here now to the S&P 500, what we call the E-mini, right? The S&P is range bound with a bear bias as price rotates lower from last week's high. The bears have the edge with the channel moving lower, and this trading range tells me to beware trying to sell new lows and stay patient for selling opportunities up around the highs tomorrow morning. So as you can see here right now, we are definitely bearish here on the chart, right? A couple things here we're looking at here right now. One, of course, being this bear channel, right? Connect those highs, connect those lows. Beautiful rotation. High to low, low to high, high to low, low to high, high to low. Where should we be looking for it next? Yep, back to that high, and then we can look for that sell right down off of that high. That's one component here. Another component, one leg, two leg, three legs lower, right? What usually happens after a measured move? We typically get a two-legged bounce and then a retest of that low, okay? Third component here, and I think it's possibly the most important component, flattening moving average, right? Double tops. Looks like a possible bottom right now. I'm going to call that a trading range. Remember, when it comes to a range-bound market, right, you want to sell high, you want to buy low, right? But don't forget about the middle, right? Avoid the middle, right? You'll notice I'm using some tricks here right now. I've added on that 33 1/3, that 66 2/3, right? 33.3, right? 66.6. Basically what that does is that breaks that range into 1/3 increments, right? Those 1/3 increments, I want to stay away from that middle, right? Get up inside the highs, look for selling opportunities up in those highs. And because the market is so bearish here, right, at least for now, I want to stay away from trying to buy off of that low. So buy low, sell high, avoid the middle, but we're not going to want to buy low because it's a bear market, right? Want to stay away from the middle and really focus on getting up, right, so we can sell it back down from there, because that's where we have levels of resistance up there. We've got areas to catch the buyers on the wrong side of the market. You know, again, if I had to kind of predict tomorrow, right, or anticipate tomorrow, I'd be looking for something similar what we saw earlier on in today's session, right? So up, price goes up, one try, two try, and back down to retest that low we go. So that's my plan for tomorrow, right? Trying to get up above the top of the channel, up above the top of that range, get above the moving average, that's for darn sure, right? And then of course, if we still go sideways here tomorrow, right? If we start seeing this thing go sideways here, okay, not a problem. I'll try to use this trend line here now. We'll try to get up, right, and sell off of that high, right? So, you know, if we're sitting there tomorrow, you know, 9:30, 9:45, 10 o'clock, and we're still sitting there going sideways, obviously that will tell us we're not as balanced as we might think we are, a little more bearishness than we thought, and we'll look to sell up above that high. So again, if we just bounce off the low right now, sell a high of that range. But if we start going sideways, the low of this range right now, stay focused on selling right up at those levels of resistance. What if price keeps going lower here? Well, remember, two try rule, right? So one try, right? Two try. It's all going to depend on what happens if we can go to a new lower low here. Most of the time, a lower low below a trading range just ends up being a buying opportunity on two try rule, right? One try, two try, and then we see a buy going back up. So I've been looking for that chance to buy after that second try. Okay, now, sometimes it shows this explosive move, right? So if we see this thing really crank lower here, right, you'll know when you see it, right? It'll look like no way anybody's buying this thing right now. It'll just tank, right? It'll probably drop lifelessly down to that 94.5 area. If that's the case, right, then we'll see too much strength to call this a range-bound market, right? I'll look for a new channel find that low, and then we'll look for it, right, to sell high right from there. So in order for us to want to sell lower, right, tomorrow, we have to see a lot of strength, right, going lower. Okay, we got a big round number down at 2,700 for the magnet, and we got some prior month levels hanging out down those 2674 half areas. So definitely have some levels of support to look forward to. How do we turn bullish tomorrow? Same thing as we said for oil. Strength, pullback, strength. And I would imagine it's going to have to be probably a hold above that trend line here, right? So get above, moving average comes over, pull back and go, find your hidden channel, right? Look for that buy. And again, at that point now you'll have levels of support to use or levels of resistance which can be used now as support. And if they can get their hands on that here tomorrow, we get a nice big target, right, back up to retest Friday's high, right? So that's definitely something to look forward to for the bulls if those bulls can take control tomorrow morning. All right, let's keep going. From the S&P now over to another much more obvious range-bound market, this time on the Nasdaq. Here in the Nasdaq, we're range-bound with a triangle. And if you look closely, you can see we also have, right, potential for a megaphone as well. Most importantly is the triangle. We have lower highs, we have higher lows, flattening moving average, right? We're trading in the middle. Anytime I see a lack of higher highs, lack of lower lows, I know it's going to be a range. And anytime we have a range, we know to fade the breakouts. In other words, sell as prices going higher. Buy as prices going lower. Avoid the middle of that range and focus on failures using the 2-try rule here for tomorrow. Now, some great examples in this chart tonight. First of all, if we take these lows and line these lows up, you can see we're on the right track there. If I take that same trend line and I paste it up to these highs, you'll notice we have potential here for maybe a bull channel, right? But let's wrap it all together once we're done though. If I take these highs, and this is a really good example of the most reliable way to draw a triangle, right? You might be asking, why not draw the triangle like that, right? Why not draw it across the most recent high? Well, because then you've got to admit you're ignoring that high right there. The problem is we don't want to do that, right? And you'll learn these tricks in the intermediate course. Here's an easy way to do it. Go back and think, right? Go back like this, right? Scroll back with this last week, right? Scroll back and think about where that trend line will be drawn as you go, right? So as we go higher here, we try to retest the high, right? The buyers fail. That's your trend line right there. Okay, that's the only trend line we have, right? We have available. Okay, so now watch it comes back. Right? Now we see that higher low, right? Now we draw this trend line in. Okay, so now we have two trend lines, one coming off the high, right? One coming off of that low. Okay, now knowing this, we should expect to see sellers up here. Right? We should expect to see sellers selling above these, right? Above this range high. And look what happens. We jump up, we pull back to the moving average. I'm expecting that buyers are going to confuse this now, right, as a bull market, and they'll try to buy that pullback. Once they fail, we should go back down to the opposite side of that range. There we are, back down to the opposite side. So now by doing that simple exercise, right, walking it back and then slowly going forward, that tells you this is the triangle. Right? It's not this one. Okay, so don't make that simple but very easy mistake to make. I did that all the time early in my career, and it wasn't until a good mentor of mine said, no, wait a second. Go back, right? And then walk it slowly and really pretend like you were there right in real time. You know, sometimes we open up a chart, and because we have the benefit of hindsight, we get lazy. But it's important that we think about, okay, what was first? What came first? What would I have been thinking, right, on Monday's holiday? It would have been, right, it would have been lower high. Then once you see the bounce off this low, it'd be higher low. Once you see that, then you know we're range bound, right? We go back up, 1 try, 2 try, back down in. Okay, no surprise, we settle back to the opposite side. Okay, so now let's kind of put this stuff, or hold on, 1 second, one more thing. Okay, so now you kind of know where that triangle is. One more thing, maybe 2 more things. Measured move, resistance overhead, measured move, support level below. Okay, so those are all the components now. We have a triangle, we get a couple of these hidden channels, and we get a measured move. What is interesting though is, if you take these lows, line those up, take these highs, right, this might be where we get the best opportunities tomorrow. Down and back up, right, off of those trend lines. Okay, up, and back down. You'll notice we incorporate a lot of levels of resistance there. The swing highs, the measured moves, right? The prior week high, whatever, right? Whatever direction you want to trade in, one try, two try, up off that trend line at the highs, right? One try, two try, right off that trend line off the lows. You'll notice I never say just buy the trend line, okay? Because usually what happens is it goes too strong. You can't rely on just buying the trend line, right? You've got to wait for those sellers, try again, and then once they fail, then we can start looking for that buy going back up into that range, okay, or back down to the range. So avoid the middle, right? Stay away from this middle. It's always the hardest part of ranges. Get up, one try, two try, back down in. Okay, it doesn't need to be all the way to the high. It doesn't need to be all the way to the measured move. It doesn't need to incorporate these hidden channels, but I just want to get it outside this range. Okay, downside, same thing. One try, two try, back up in. Okay, again, not the first try, wait for the second try. And as we always say in our trade room, the second try seems to take forever, but stay patient for it because it almost always happens. All right, so stay away from that middle. Buy those lows, sell those highs. We saw a great example of that little trick of walking it back, right, and then walking forward so you can see what levels will be where without, right, suffering from the benefit of hindsight. Hardest part of a range-bound market, is simply sitting through the middle, right? Sitting through that middle and staying patient for those breakouts. And don't let those breakouts fool you, okay? It's not until we see a real strong breakout, pullback, and go, that's when we can start looking for, right, this as a potential new trending market. All right, now to a real trending market, right? How about that gold? The yellow metal is bearish with a grind break. That grind break happened just above that high of that bear channel. That tells me that sellers have been given the opportunity to sell high, right? They haven't been given the opportunity to sell high as price collapsed off last Friday's high. Okay, knowing this information, I can assume sellers will be waiting for opportunities using a two-legged pullback, and I'll be waiting to sell right along with them up at resistance levels here tomorrow morning. Now, I want to show you something here. This is something very, very common, and we talk about this a lot in our trade room. When I have a bear channel, let's go red color here, right? When I have a bear channel, anytime I see a bear channel, the most reliable trade is usually going to be some sort of two-legged pullback, right, and retest the high. A two-legged pullback, I talk about these quite a bit. What do two-legged pullbacks allow us to do? Two things. One, they allow sellers to sell high. And unless you're brand new to trading, you've probably heard people say before, or in, Day Trading for Dummies, or, Day Trading 101 book, right? The goal is in a bear market to sell high, right? So two-legged pullbacks, what they do is, right, they give us a chance to sell high. But think one more level further, okay? When we see a two-legged pullback, what also happens? We have short-term buyers who think this is a reversal. Now, I don't know about you, but I'm going to give away one of my worst habits I had when I was younger. Okay, one of the mistakes that I made early in my career is I traded a fast time frame. For example, right, like on the gold, right, I would trade a little 144 tick chart, right? Now, when I was brand new, right, I would trade a real fast time frame. Why? Smaller stops, more patterns, right? Also more fun, right? It's faster pace, okay? Not everyone might be into that faster pace, but that was why I used to trade a fast time frame when I was a new trader, right? Small stops, right? Small amount of risk, okay? More patterns and faster pace. At first glance, it sounds like a faster time frame would be the perfect scenario for a day trader. But there's one thing: too much noise, right? Too much noise. In other words, all you can see is, right, the nano picture, right? You can't see the big picture. Okay, you can't see the bigger picture. Okay, and where am I going with this? Well, when I was a rookie trader, and I, of course, lost all my money 3 times over. I lost over $100,000 in the first 3 years of my career. Okay, I've got the bumps and bruises. I think that's why I'm a good teacher, because I really have a soft spot in my heart every day to help my new clients become successful. My success is your success, and vice versa. But the reality, though, is one of the critical mistakes that I made, and one of the critical mistakes a lot of new traders make, is they get wrapped into these real fast time frames. 89 tick chart, 144 tick chart, right? A lot of markets, right? 233 tick chart. These are real fast time frames. So where am I going with this? Well, the bottom line is when we get a two-legged pullback, when the market goes 2 legs up like this, okay, a lot of those short-term time frames make you think we're now bullish. Too much, right? Too little time frame doesn't give you the ability to look back and say, wait, whoa, we're not bullish yet. This is just a two-legged pullback. So now, as the buyers are now thinking this market is bullish, guess where the sellers are looking? Yeah, they're looking right here now where all those buyers start to get crushed as the market returns back to its longer trend. So the big reasons why we like a two-legged pullback is because A, it gives us a chance to sell high, which is just kind of, rule numero uno, right, when it comes to being a successful seller. And the second thing is it fools all those rookie traders, right? And some experienced traders too, right? I'm not perfect by any means, right? I've had many times before where I think it's going to reverse and it doesn't yet and collapses back down as well. Okay, so now go back to our chart. The only pullback we got so far today was what? One leg, right? What haven't we seen? We haven't seen a two-legged pullback. It's the lack of that two-legged pullback that tells me there are still quite a bit of sellers that are still waiting out here. So that's the plan for the gold tomorrow. And it'll be very similar on the euro. Wait till you see the euro, right? I got a little quiz on the euro for you, right, in a second. So looking for a two-legged pullback. One leg down, 2 legs up, right, and then back down. That two-legged pullback will usually produce a failure into strength into pullback, right, and pullback back down, right? So selling that two-legged pullback, using that trend line, selling back below that moving average as it comes over, right, and selling that pullback to the moving average as it goes, right? We have that moving average coming over, right, across, almost identical we saw right there, right? You can see here as the market went up, buyers tried to buy that pullback and they just got smoked. That's exactly the same type of scenario we're looking for here for tomorrow. As you can see, we're 1, 2, 3, almost 4 legs lower here. Now we do have a really big carrot at the end of this stick because we get a big swing down here at 19 and we get a prior week low at 16. So there's definitely room to go lower here. But the one thing you can see is we haven't seen a chance to get sellers involved here. So 1 two-legged move up. Now, if the buyers can hold that and explode higher, now we're a bull market, right? But anything else besides explosiveness going higher, and now we're going right back down again, right, to retest that low. So sit tight for that. Oh, sorry about that, wrong button. What if we go sideways here tomorrow? This definitely could happen. There's that quadruple down right there at 29.6. If we go sideways, we're definitely a bear market still, right? Anytime we stop making lower lows in a bear market, we call this a range-bound market. And whenever we see a range-bound market, 1 try, 2 try, right? And back down we go from there. Okay, 1 try, 2 try, right? And then back down we go from there. As the market keeps going lower, hey, maybe I'm wrong, or maybe I'm just a little too early. If we start going lower here, right, what's your plan? Same thing. Doesn't change. If we go lower here without a pullback, same thing for tomorrow, right? Still going to wait for that pullback. Still going to wait and make sure, right? Still going to wait and make sure I have that option to sell high here tomorrow. In a bear market, sell at resistance. Don't sell at support. It's one of the easiest ways, right? It's one of the easiest ways to avoid a lot of traps in these markets. Now, last but not least here, wrapping up here on the euro. Euro is bearish with a spike in channel as it tries to push through the measured move and reach last week's support levels. Get some major support levels down to that 23,000. And the first thing we notice in this chart is we can see the spike in channel. We can see the bearish trend. But what don't we see? We haven't trapped above any prior swings. And that tells me that there are lots and lots of sellers that are still waiting patiently to get into this move going lower. Knowing this information, my plan is to stay patient, avoid selling too low here, and look for selling opportunities. I'd like to get up in that battle zone where you can see a little bit of an overlap, right, with those candlesticks. So a couple things here we see in the chart right now. First of all, the big picture looks really, really good here for the euro. Right, we got a nice, and of course, as a day trader, we don't care direction. I'm not buying and holding, I'm not selling and holding, short-term trading. Right, so we had a big run up to finish up last week. Beautiful trap low, right, finish session, but that didn't last very long. Collapsed right back down. Bear spike in channel. Look at that jump up and back down we go. Where are we trying to get to here? Major swing around 23,000. There's one more, though, just below that 22,400. You can just smell those final targets for those sellers. So tomorrow, one of the things we're looking for is to sell high, but also try to leave a portion to run this week because you've got all of that short covering rally, right? That same strategy we talked about last Friday's session. That same market psychology that produced a short covering rally, this is now a long exit, a collapse, right? So think about this, right? Think about it this way. All the buyers who bought pullbacks here, once they start seeing this thing give way, they're gonna have a hard time holding these trades open. And they're going to want to get out of their long positions, which will throw gasoline right on this move. So last Thursday night into Friday, we talked about the short covering rally strategy. This is one of those times where we see a big move up previously. This could get really aggressive here for those euro traders. This is exactly the same, but opposite, right? Opposite, but same principles we talked about from last Thursday's session, right? Last Thursday's nightly newsletter. I'll put a link up here, top of the page here right now. Check that link, right? And you can go back and watch last Thursday's newsletter, and you can see what I'm talking about, right? So all those buyers, right, who were in long from last week, are they really going to sit here and let the whole thing collapse in front of them? No, they're probably not. So that's why I say, good idea, get in at resistance, but try to leave a portion of the position to run because of that kind of exodus of those bulls. Buyers exiting positions, right, they become sellers. So as we go lower, right, bears spike in channels always tell me here, look to get up into levels of resistance and back down. Really, at this point, though, I think all we really need to see right away for the minimum criteria is a trap high, right? Trap high above a prior swing, trap high above a prior swing. You'll notice none of these swings have been broken, right? None. Prior swing high there, prior swing high there, prior swing high there, right? None of them have been broken. So first things first, let's get above some of those swings and let's get working for selling opportunities from there, right? So price goes up, trap high, failure, strength, pull back, back down again. Maybe it's more dramatic, right? Maybe it's more dramatic. Maybe we go up one-legged, two-leg, then into a failure, then back down from there. You know, we won't know until we get there. As the price goes lower here, right? As the market goes lower, same thing, right? Got to be careful now. We don't want to sell into those major levels of support. Again, I do want to be a seller, but I don't want to sell where bears are expected to take their profit, right? So if we keep going lower here, stay focused on those traps, right? And we'll try to grab it up off that high, right? So even if the price starts collapsing lower, stay focused on those traps because eventually here we're going to trap high and you'll be thankful you waited for, right, that opportunity to sell up at resistance, right? So rather than trying to force trades at support, wait to sell back up right overhead. So beautiful examples here of spiking channels, but no traps, right? No breaks above prior swings. Waiting for that on the euro, waiting for a two-legged pullback here on the gold. On the Nasdaq is range bound, looking to fade those breakouts, right? S&P is range bound. A lot clearer trend though on the S&P. looking to go back up, right, to retest those highs and solve those highs. And again, oil is a really good example of just being so close to the objective, is we really want to try to get up off that low and sell high from there, and try to get this thing now, right, to get this thing up off that low so we can sell up above that level of support. All right, guys, I hope you found a ton of value in today's nightly newsletter. Don't forget, if you're on YouTube right now, subscribe to the channel, hit the bell icon so you always get notified every time I post a new video. Any questions? I'm sure you guys have questions. Put them in the comments section below the video. And don't forget, inside the description of the YouTube video, or if you're on the blog at Sideways Markets, look on the right-hand side of the web page, and you'll see a link to come join me here at the website at schooloftrade.com. While you're here, don't forget, do you want to learn the strategy we trade every day in our trade room? I hope you do, right? Get a great free trial. As part of our free trial, I'll teach you the basic principles of how we trade, what we trade, when we trade, why we trade, all the who, what, where, when, and why. I'll shoot you an invite to come out and join me in the trade room as a guest. And then don't forget, while you're here, check out our beginner, intermediate, and advanced classes here at School of Trade. Whether you're a brand new trader, right, or you're a grizzled veteran, we have a place for you guys, and I've been running my trade room for over 10 years here at School of Trade. We've had over 3,000 graduates here at SOT the last 10 years, and we are really excited to work with you guys here as new clients. Don't forget, hit me up on live support if you have any questions, or drop me a comment below the video. Tomorrow morning, we open up at 8 o'clock Eastern time in the trade room. I hope to see you there. If not, come back and see me again tomorrow, same time, same place, for another edition of our nightly newsletter. That'll do it for me, guys. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.